What's going on, cowboy? In this video, we've got another developer interview in Prometheus, and we're talking about Hector DAO, a new decentralized autonomous organization. That's what DAO stands for, and their foray into DeFi. And basically, we need to figure out, hey, is this a project that you and I can stake or could put our hard-earned money and time into? Or is this another scam, fly by night, don't even pay attention to this thing that's just trying to take our money? I'm not your financial investor, okay? I'm just a guy bringing you different options of coins, and you can make your best decision. Not your financial advisor. I'm just a lizard brain, gorilla arm, diamond-handed cowboy exploring the wild west of cryptocurrency with a whole bunch of other cowboys. If you want to join us, hit the subscribe button down below. Join us at cowboysofcrypto.com. Become an official member over there today. Look, you got to understand where I'm coming from, my mindset with these interviews. I go to these different YouTube channels and I don't know whether or not they're being paid to show me a coin or not. Okay. And so if they're getting paid and they don't disclose that, that means a couple things. One, you are getting biased information, not accurate information. Okay. Two, the developer is not happy because they usually do a bad job about it, right? They don't include something that's awesome, or they include wrong information, or there's no energy. So the solution for you is to get these developers to start talking to you directly. And the best way I could do that is by an interview. Okay. That's why these are so important. So it's for you to make your best decision. Now, we have in the hot seat. I call it the hot seat because I like to chicken fry it up some developers out here, some founders, some CEOs, and we have Prometheus in the hot seat talking about Hector DAO. Prometheus, welcome to the hot seat.
Cowboys, it's great to be here. Thanks for having me.
Absolutely glad to have you. Okay, first, right off the bat, I see a blank screen icon over there. I need to ask you, why Prometheus? Would you not disclose your name or your face? Why stay anonymous, and why not dox yourself?
Yeah, I mean, we get this question a lot, so I'm very used to answering this one. So the reason we don't do it is because, well, let me start off this way. So I understand the call for doxing. I understand the need for the security. There are too many scams. There's too many terrible people stealing people's money. No one likes to see it. It's heartbreaking. And, what frustrates me is these scammers are the first people who complain about regulation, and they are the ones who are inviting it by doing what they're doing. Yeah. So trust me, we're on the same page with that one. Now, one of the solutions that people like to look forward to in terms of, having the security and the belief that it's not going to be a scam is they like to have doxed devs. And that does provide some sort of barrier. It does provide some sort of credence to the fact that they're not going to be a rug pull or a scam or whatever you want to call it. But it doesn't make it certain that that's not going to happen. It's not entirely impossible to fabricate, for example, an identity and pretend that I'm this person, and you can trust me. Now, I'm not going to say that doxed devs will also scam, because generally they won't. It is a good sign. It's always a good sign that it's something everybody likes to see. So the reasons that I have not done it are because in the early stages of a project, things are very volatile. We all know this. Generally you have the pattern of your launch pump. Things go really well. Everybody's talking about buying Lamborghinis. It goes to the moon. And then the early holders start to take profits, which is completely natural. And it's also completely fine, by the way. Now, in those early stages, when that initial price pump is over and you start to settle into a new range, people tend to get a little bit more aggressive. They tend to start making threats. Now, I'm used to that. I've been around the block a few times, and I've seen the way it goes. I know how people react to these things. I know how to address all of this FUD. But what I don't want is to put my family at risk because of that. When Hector becomes much larger, doxing, it's not something that's off the table. It's not something I'll never ever do. It is there. It's a possibility. But right now, I have people that I need to protect from. We'll call them reactional investors, perhaps is the best way to phrase it. So, maybe you will get to know me in person at some point soon. If and when the project takes off and we hit those big market caps, then I'll be the first person to jump in and say, hey, this is who I am and this is my face.
I appreciate that. Yeah, it makes a lot of sense. Do I agree with it or not? I don't know if I agree with it totally, but I see where you're coming from, the logic of it, right? In the future, I'm more than willing to dox myself, but for right now, there's so much volatility in the market that you can't control, and you especially can't control these random people on crypto who you know nothing about, freaking out, trying to find out who you are, and more importantly, I'm a family man myself, so I fully get your sentiment. Where that's coming from. Okay, so let's get right into Hect Or actually, one more question about you. Maybe you don't have to tell me all like incriminating evidence of who you are, but tell me a little bit about yourself, right? Prometheus, like who are you coming into, like some background information coming into Hector DAO and crypto in general?
Yeah, absolutely. Well, I am Prometheus. For those of you who haven't guessed already, I'm from the United Kingdom, hence the accent. I've been in crypto for maybe 2.5, 3 years. I was a slightly less serious investor back in the early days. And as crypto has grown, my interest has grown, and I've become more of a serious investor. Started to make more money, which is always good news. And I guess the real reason I love crypto is because I grew up around computers all the time, taking them apart, putting them back together, coding, all of that stuff. I love it, and so I'm always looking for the next disruptor, the next big change in industries, and crypto really is that. I truly believe it's, we've all seen it's changing the world. Bitcoin is gaining mass institutional adoption, for example, and it's really paved the way for, every project that you see, and things are changing. So, that's why I'm in crypto. In terms of me as a character, I love interacting with the community. I love strategizing. I love planning. I love implementing things, and seeing. My favorite thing is to see people celebrating, their winnings, their price increases, and those DMs that you get from people who say, "Hey, man, I bought a new phone," or I was able to pay off some debts or get car insurance or whatever it might be. That's what I'm really about.
Yeah, that's awesome. Yeah, it warms your heart, doesn't it? It's really cool. Now, tell me a little bit about Hector DAO. What is it? What's it trying to accomplish?
Absolutely. Yep. So HectorDAO is a project that lives on the Fantom Opera chain. So the first question I would get asked is, why Fantom Opera? And what is Fantom Opera? So Fantom Opera is a chain in the same way that Ethereum, Bitcoin, and Avalanche, all of the other chains that we're familiar with. We chose Fantom Opera because it's extremely fast. It's very, very secure, and the transaction fees are so low that they just don't even matter. And one of the things that really stands out to me is that it hasn't had what I call the Solana moment. So by Solana moment, I mean, at the start of this year, Solana was trading around $7, and now it's at 240, 250.
Mm.
And, we know how that story goes. And I really think Fantom has the fundamentals to have a Solana moment. So we wanted to be here so that we can become a de facto project of Fantom and then enjoy that upwards movement as it happens. So about the project itself. Now, when I talk about this to people who are interviewing me, I like to start with how it works for the investor. So what's the value proposition here? Now, the value proposition is that, let me check current figures. We can offer 733,250.1% APY on coins that you stake with us. You won't find that at a bank. It's one of those numbers where you hear it and you think that's not possible. He's lying. But I can explain how it works. So that's the value proposition. So you stake your money with us, you gain reflected rewards, and you make money. And over time, your cost basis falls towards zero, so chart prices don't matter as much, and it makes it a long-term value proposition, long-term wealth creation, and it helps us expand. So let's jump straight into the first question. And how do we create these APYs?
Yeah, before even that, I want to define it, the APY, just for anyone who's kind of new
Absolutely,
to it.
yeah.
People who stake have their crypto. They go to your platform. It's a DeFi platform, and they give you their money. They stake it, right? They give you money, and they can make over 7,000% back on that investment over the year, right?
700,000%.
700,000.
700,000%.
So they could make 700,000. What is even that? What is that?
So the equation we use, super simple one. So let's say that you take $1 and you put your dollar into the system. Now this has a few assumptions. It assumes that the chart prices don't move at all. So we're currently somewhere $225 a token, I think. Mm-hmm. So let's assume we stay exactly 225. Now, to look at percentage rewards in terms of everybody talks about a 10x, 100x. So let's convert it to that. So you would divide the APY by 100 because it's a percentage, which would mean that you would make $70,000 in 365 days. And I know how crazy that sounds.
It sounds like a scam.
It does. It really does. Yep.
Okay, so help me explain my lizard brain because you're about to break it. I'm feeling. How does it
Yeah,
work?
let's jump straight into it.
Yeah.
So we let's look at it from a smart chain perspective. So because this is where most traders are, right? So on the smart chain, projects launch, they put their liquidity into usually PancakeSwap, and you can trade on PancakeSwap. So increased buying pressure means more demand. More demand means higher prices. Increased selling pressure means obviously less demand, and then the chart prices fall. And we've all seen the system. You buy low, you sell high, and that's how you make your profit. Hopefully. Now we also operate in a very similar method. So we're listed mainly in a place called Spooky Swap, which is the PancakeSwap of the Fantom network, essentially.
Mm-hmm.
And we do things slightly differently though. So with our project, you can buy tokens directly from the protocol instead of going to market. Now, why would you do this? So we call them bonds. What you will do is you'll bring a stable coin, so DAI, USDC, soon Magic Internet Money, so Abracadabra's currency, and you give it to the protocol, and the protocol gives you tokens at a discount to the market price, usually between 10 and 15%, but it can go as high as 25, 30 sometimes.
When you mean
Depending on
give it
market.
to the protocol, do you mean give it to Spooky Swap, trade it on Spooky Swap?
No, you give
Okay.
it to the Hector DAO protocol. So you would come to our website and you would purchase a bond with your stable coins.
Got it. Okay.
Now, the incentive there is that you are getting discounted coins. So let's assume that the token price doesn't change on the charts. You've already made a 10%, 15%, whatever the discount was on the bond that you purchased. And bonds are vested over a period of 5 days, meaning that let's say you buy a bond worth 100 HEC tokens, you'll receive 20% per day. It can be claimed at any time, but you will get 20% per day. So you'll get 20 tokens per day. And then you can claim those and do with them what you wish. You can sell them, you can stake them to gain APYs. Now, the APYs that we get are from bond sales. So the profits we take from bond sales are used to generate APYs. So we mint tokens that are backed by real currency, because remember, you're giving us stable coins for your bonds. So we use those stable coins to back real tokens with real money. And those tokens are then given to people as APY reflections.
Okay. So let me try to clear this up. There's Spooky Swap. Okay. And you could trade on there and you could get the tokens there. Fine.
Yeah.
But what you really want to do is head to HectorDAO, the website, and trade towards that, right? Trades towards Hector on the website and on the protocol, as you say. Now I'm a lizard brain, so I'm just trying to line it out simply. And you said that when people buy on there, their incentive is they get it from anywhere from 10 to 15% cheaper than they would get it on the open market on a Spooky Swap, correct?
Yeah.
So when they do that, where is you said you're going to take the profits and put it towards the rewards. I don't understand how profits work there.
So one of the things we do with the stable coins that people give in bonds. So the reason we take stable coins is because it's a stable asset that you can use to collateralize things. So we then have a dynamic supply of Hector tokens, and we back that using the reserves that we get from, let's say, for example, you give us 1,000 DAI, which is a stable coin pegged to the US dollar, so $1,000. So you buy a bond. That $1,000 goes into our reserve, which means we are then promising to back every single Hector token with the total reserve amount. Now, our reserve amount currently, let's check this. Our total value deposited in staking is $60 million. And our Treasury balance, so our reserves, is $10.8 million, meaning that for all of the Hector tokens that are out there, we have $10.8 million of value backing them, meaning that there is an intrinsic price floor below which those tokens cannot go because they're backed to that level.
Because you have the actual DAI in
Yeah,
hand, or
because we quite literally have the money to back those tokens within the protocol.
So it can't go less than that because it doesn't make sense. So what is a dynamic supply?
So when we interact with tokens, or when the protocol directly, so by protocol, for the record, I mean HectorDAO just as an entity. So when the protocol interacts with tokens and traders and investors, we sometimes need to mint them and we sometimes need to destroy them. So the circulating and total supply can go up and down depending on what's happening in the market. The reason that's not something to worry about, because I see the immediate question: if the supply is going up, surely the demand has to fall, or the value per token has to fall. The supply goes up when there are tokens that we can create which are backed, which means that the circulating supply doesn't matter as much as you might think, with, for example, a meme coin.
Okay. So you're saying that. So help me understand again. Why does it not matter? Like one more time.
So let's say I have we'll call it Prometheus coin, and I create Prometheus coin. There is no utility to it, no use case. It's just a meme coin. I'll get Elon Musk to tweet about it, and the value will go flying through the roof. So there is no intrinsic specific value behind the token. It's not used for anything. It doesn't give you an advantage anywhere. It doesn't store value. It
Agreed.
just people buy it and it becomes worth more, and then they sell it.
Mm-hmm.
So let's say that I start the initial supply at 1,000 Prometheus coins, and I then say I'm going to mint another 1,000.
Mm-hmm.
Theoretically speaking, if there is no more buying volume or anything to back that, it should halve the price of the token because I'm doubling the supply.
Yep.
So we only mint tokens when they are backed by real money.
Okay.
Which means that you don't have that effect because we back it with the Treasury.
Got it. Okay. And I'm assuming there's a certain percentage to where you would mint a token. You know what I mean? Like it's not a 1-to-1 percentage, right? You're minting a token based on, or it's not a 1-to-1, like every dollar you're minting is a hector or a heck.
No, because the price of Hector tokens is about $220-ish, $230 right now.
Okay. So I still don't understand how that leads to the rewards then.
So the part of the Treasury goes into backing tokens, and then part of it goes into rewards. So the protocol will then mint those rewards as SHEC, which is the staked version of the token. The reason we use a different token is because it's easier to do compounding maths on it. So you come to the protocol, you go to our website and you stake, and then you swap your HEC tokens for SHEC. So the important thing to remember is that those tokens are always forever going to be interchangeable 1-to-1. They're exactly the same thing. You just use one to stake and one to use. And so when the protocol receives money through bond sales or wherever it is getting its money from for this particular purchase, it will then use that money to create SHEC tokens, and give them to stakers, who can then trade them back to HEC if they want to by unstaking, and then they can do whatever they wish with them at the market, or they can restake them. It's really up to the trader.
So that 700,000 APY return, that can't be sustainable, right? That goes up and down based on the amount of bond sales and profits that come from all over the place, but particularly bond sales. Is that correct?
Exactly, yeah. So we have just migrated to a fresh staking contract. So the reason we did that is because our growth was significant, we'll call it. So last Wednesday we were trading at $30 per token, and now we're at 230, 240.
Whoa, congratulations. That's awesome.
Yeah, it's been a crazy week for us. And I always say this, but it's my favorite problem that I've ever had, because the growth was so fast that our bonding contract couldn't actually bond fast enough without creating too much debt for the protocol.
That's crypto. And I guess when you are offering 700,000% return, I'm like, I need a buy-in right now.
It's a wild ride. It truly is. And so we created this new staking contract, which allows us to create tokens and give APYs in a more sustainable way. Because the thing we really like to focus on is, a pump to the moon is great. Everyone wants that. But it doesn't really serve anybody in a longer term. There's always going to be people who take a disproportionate amount of profit. And then there will always be people who buy it at the wrong time and they're left holding the bag, proverbially. So that's not what we want with this token.
I just did the math on it. You're making 2,000% return a day if you do a 700,000% for the year. Now, of course, that can't sustain for the whole year. But if you're in for a day, you make 2,000% just for till the next day. Is that math correct?
No, it's not. So I will check my stake right now, and I will tell you what the ROI is. So the 5-day reward rate is 12.9%. So the reason the math is different is because, remember, it's compounding. It's APY, not APR. So that 12% compounds on the last 12%, which compounds on the previous, and so forth.
Okay.
So the majority of that huge percentage gain will be towards the end of when you stake, if you so choose.
And that makes sense because you'd want to incentivize people to stake longer and make. Okay, I get it.
Exactly. So when they stake, they're promising not to sell, which reduces selling pressure and helps the chart stabilize their prices.
And that's why it's APY, not APR, right?
Exactly. Yeah, exactly.
Real quick for us lizard brains, what is the difference between APY and APR?
APY compounds, APR does not. So APY is generally more powerful. It's the one that you want.
Got it. And that's why you could offer it such big gains. And that's interesting that it starts off at 12 and then goes crazy. I mean, like, that's a crazy amount. And so if you stake for longer than a year, does that then get bigger than that?
Yep. So you'll continue accruing interest. There is an indefinite staking period. You can stake for however long you want. But what I will emphasize is that because we have recently moved contracts, the APYs are a little bit volatile. So for the last 2 weeks, we've been sitting at roughly somewhere between 150 to 400,000, usually in the high 250s to 300s, which it's high. It's very, very high. So I'm not
That's
going to complain about
incredibly
it.
high. That is incredibly high. If someone said, "Hey, Aaron, I'm going to give you 100,000," this is the low end of it, but 100,000% return on your investment in a year. It's like what is happening? Like,
Well, imagine if I could say to you, here's Prometheus coin, and you know, I can tell you for certain that you're going to get a 10,000x on it in a year.
Mhm.
Essentially, I mean, that's just 100,000%, right? That's a
Yeah.
low ball figure currently. Now, there's no guarantees in crypto. The prices go up, the prices go down. There's pumps, there's dips, there's bull markets, there's bear markets. What we are trying to do, though, is to create a long-term sustainable project. So as I mentioned before, a pump and dump, we've all seen it. Maybe some of the viewers who are watching right now have made money off it. And if you have, more power to you, congratulations. But one of the reasons we introduced the new staking contract is because, we would love to fly to the moon and go past 100 mil, 200 mil market cap, but it's not sustainable and it doesn't serve our community and it doesn't serve our goals in the way that we want it to. And so we really look for manageable growth.
Yeah.
Now, 700,000% sounds absolutely fantastic, and obviously that number will come down as more people stake because there is lower stake to have. But we've reliably been able to keep it at between 150 to 400, usually above 200 to 250.
Well, first, I mean, that is just incredible. First of all, right? Like that's incredible. But give me some like securities here, right? If I'm an investor and I'm curious about this,
Yeah.
what can I see at Hector that is like giving me confidence, right? Are you guys audited?
So Hector is a fork of Ohm, which is a project that exists on Ethereum, which does very, very similar things. Now, the Ohm contracts have been audited. Therefore, the Hector, for the most part, have been. We have made some changes ourselves, but we are planning to do full audits, all of the big name audits, not just an audit that says the contract works, but we're looking at security audits. In addition to that, we've locked our liquidity pool, so you can find all of those links to those locks if you wish in our socials and everywhere else. We've invested our marketing funds, meaning that every week we get a payout of marketing funds which we can use, which means that we can't just run away with invested funds. And that vest lasts until I believe the 27th of December. In addition to that, we also have something called multi-signature authentication. So for those who are unfamiliar, multi-signature authentication means that we have essentially delegated certain functions of the contract to what is called a safe, which is basically a wallet that can be voted on. So for things that are slightly less important to the protocol, so adding bonds, adjusting prices, that's in what we call the 3 of 6, which means that there are 6 signatories, but 3 of them have to agree for anything to pass through, and anybody can reject it at any time.
Got it.
And for the more important stuff, we have a 5 of 7, meaning that 5 people have to agree, on if Treasury funds are going to be altered, for example. So 5 people have to be present and they have to agree on any transaction, otherwise it cannot pass. The reason we have a redundancy in there, so it's not 7 of 7 or 6 of 6, is because if somebody loses access to their wallet, then you've got a really bad situation.
I've seen whole projects get totally stolen from one team member. So I love the idea of a multi-sig wallet. I love that. What concerns me a little bit is you don't have it audited, but you are getting it audited,
Yes.
which is great. So I mean, when did HectorDAO start?
2 weeks ago, just over 2 weeks, I believe.
Okay, so you're 2 weeks into it. Okay, so yeah, okay, got it. So no problem. It makes sense that you're not exactly audited right now, but I like to see that is going to be happening. I don't trust that, like, hey, just because we're a fork and I mean, obviously you make changes and stuff, so that's so important. But that's good. Working on the audit, I like that. Cool. And so, how big is your team here? You mentioned your team a little bit.
Yeah, so we have a team of 12. We've got some very, very talented developers, very talented marketing team, and then the rest of us are strategists. So myself, for example, I'm a strategist and I do PR as well. So I'm very community facing, but I also sit on the board and make decisions for the project in general. Mm-hmm. We span very diverse regions. We seem to be mostly focused in Europe, but we have people in Australia, China, Russia, So we've got a lot of time zone coverage, and more importantly as well, we have a lot of marketing coverage because we have the advantage that we speak the languages, we understand the cultures, and that's been really, really beneficial to us so far.
Got it. So what's the goal here then? What are you trying to accomplish in the world? What in the world of crypto? Like, give me like the end goal here.
So stable coins are, everybody should be familiar with them if you're in the crypto industry. So you bring your fiat dollars, you say, here's a fiat dollar, I want you to give me an internet dollar. And then your stablecoin issuer of choice, whether it be Tether, Binance, whoever you get your coins from, will then give you a digital dollar. Now, that system's great in a system where, for example, in the US, because most stablecoins are pegged to the US, there seems to be the start of inflation to, even you could call it hyperinflation. Now,
super hyperinflation over here, man.
Yeah, it's a scary thing. So since the 40s, for example, the spending power of a dollar in the 1940s was 25 times higher, roughly, than it is now. So let's say I could set up a crypto coin, we'll call it Prometheus coin again, and I say to you, doesn't matter how much you buy, how much you pump, how much you dump, the chart is just going to be on a downwards trajectory, and it's going to lose 90% of its value. Would you invest? No, I don't think you would. So that is the dollar, because the Fed, its monetary policy seems to be hindering its own value because they're printing dollars.
You don't have to convince me that the
Yep.
Fed is screwing everybody. You don't have to do that. And I think everyone in crypto is convinced.
Yeah.
Honestly, I think 100% of people in crypto are convinced that the worst scam coin out here is the USD.
Is the US dollar, yeah. I like that one, yeah.
I'm with you. So help me get to the end goal here. Against the USD, what is Hector doing?
So the reason I bring up stablecoins is that they don't really act as a particularly great reserve currency for cryptocurrencies, because cryptos move quite fast and the dollar seems to devalue quite quickly as well. So what we want to do is create a reserve currency that becomes the de facto reserve currency, at first on the Fantom network and then eventually in other places too. So we want to be able to have something that is actually backed by real assets, is actually tradable with other assets, and has some sort of utility that, you can use it as a hedge against inflation or a store of value beyond something, for example, like a traditional asset like gold, which, over the last 10 years has not really held up to its promise of being a hedge against inflation.
So you're trying to be like a Bitcoin?
In some ways, yes. I mean, Bitcoin obviously has its own utilities, but in terms of hedging inflation and storing value, yeah, I would say that's quite accurate.
You're adding far more into the ability to stake this thing, an actual DAO running this thing, and I get it, I really do. To when I hear hedge against inflation, I immediately go to Bitcoin. I'm like a Bitcoin max. I'm not exactly
right,
max,
yep.
but I'm there, right? Like I that's how much I really hate the US dollar, right? So
yeah.
But you're adding the ability to stake with this thing. You're adding the first mover advantage on the Fantom network. You're adding a DAO who's trying to always innovate on these different things. So like some kind of innovation would be moving from one type of contract to another type of contract, because you're taking in so much traffic or whatever to be able to handle all that kind of stuff.
Yeah.
So I see the differences. I just want to hear, I just want to know, like, okay, what am I dealing with here? What are you guys trying to do? And honestly, I think I think, personal opinion, there could be multiple hedges against inflation, right? You could own HEC and Bitcoin and Ethereum, and all are great hedges of inflation in their own way. So
yeah, I agree, and it would be very smart to do that. I mean, the classic thing is diversify your portfolio, right? I mean, I'm a big fan of Bitcoin, big fan of Ethereum, big fan of Matic, Fantom, all of these great coins, because they they tend to rise in value in positive market conditions. So yeah, we want to add on to that and give people some more diversification, I guess.
So one thing I knew about I thought I knew about the Fantom network, is I thought it was a strictly gaming network or gaming blockchain. I don't know much about it. I traded a little bit on it, but I thought it was mostly like focused on gaming. So when I hear Hector, I mean, it kind of surprises me a little bit.
Yeah. I mean, the Fantom network can be used for many different things. I mean, so let's look at Bitcoin as an example. So it's quite literally the blockchain. So you have a block and then a connector, and then a block and then a connector, and it's a wonderful thing. It's changed everyone's lives who is watching this. Now, the issue is it doesn't have scalability. So it's really secure because there are many nodes that are secure in the network. The scalability is not good. The transaction fees are high, and it's becoming self-deprecating in that sense. Now, Fantom uses a slightly different system called a directed acyclic graph. So transactions can go either ways, and it basically spreads out and propagates from the center as a graph, meaning that the higher the load, the faster it gets. So it's
Okay.
very, very, very fast.
Wow.
And it's very secure because you can reach consensus really quickly and you can support consensus, and it builds upon itself and becomes better over time.
I
And
love
the
it.
transaction fees are also, well, they're not as high as Ethereum, so your average transaction is maybe $0.007 on Fantom, something like that, completely
Mhm.
negligible.
Yeah, I like that because I like the Phantom network, Phantom Opera network particularly because people aren't on it yet, but it's
Yeah,
experienced a lot of hype, a lot of traction. Something like a Solana, but even I still think Solana has room to grow. I think the whole crypto industry has room to grow, and so it's kind of in my opinion, right? We're carving out a big niche, right? In this Phantom network, like being the first there, like anyone who piles into the Phantom network. I mean, it's already a proven track record where it's doing well. So I'm excited about that. I'm excited about where the possibilities are going. So I got two more questions for you, Prometheus. The first one: what is the next biggest thing that you're so excited about to share? Something I'm thinking look like a catalyst. Like why should I invest now? Because what am I looking forward to immediately as a price catalyst?
right. Well, this is perfect timing. So we have an event coming up, which we are lovingly calling Super Friday. So on Super Friday, we are launching a revolutionary type of bond. We'll be the first to do it ever. It's called fore staking, meaning that when you buy a bond, your bond is staked before you even start claiming it, meaning that your return on interest is quite a lot higher. Now that's going to send bond sales through the roof, which brings APYs up and makes us more sustainable and more appetizing to investors. Again, I'm going to reiterate, not financial advice. This is just information. Additionally, the marketing push is getting bigger and bigger and bigger. We have the new governance system, which is just rolling out. We had our first improvement protocol proposal made today, and that was to determine whether we wanted USDT bonds or MIM bonds, and MIM won out. So MIM will be coming on Friday. And in addition to that, we'll be having a big burn, significant amounts of money, which, we all love a good burn. Everyone likes to see that. And we'll be doing an AMA on Friday with some key community members as well as key team members and celebrating the whole thing and taking stock of our success over the last 2 weeks. In
Awesome.
addition to that, our marketing guys are phenomenally talented. They get constant praise from the people we work with. So it's really rewarding to see that. And that's not going to slow down. That will only speed up.
Awesome. Awesome. Yeah, I'm actually like I'm trying not to be like super biased right now, but I'm so bought in, right? If you're watching me right now, you know me. I'm just like a lizard brain, right? I see something, I like it. Hey, I like this, guys. I do. I mean, like I can't be unbiased about it. So if you're gonna get my opinion, do your own research. This is just because I like it, does I could be lizard brain, right? Just because I like it, you do your own research, you make your own calls. But so from my perspective, what I must do is I need to go on Spooky Swap, take out stablecoin, then go to Prometheus and then get that stablecoin, or get a wallet, MetaMask wallet, upload the Phantom Opera network on it, send stablecoin over. But is there a bridge? Like this kind of gets confusing sometimes if you're not playing on the Phantom network.
Yeah. So the main issue the Phantom Network has right now is that the barrier to entry is just a tiny, tiny bit too high, but it is getting better every single
It's
day.
it's not a tiny bit too high. It's incredibly high. I made
See,
a
I was trying to
whole
be very
video
kind there, but
I
yes,
made
it
a
is quite
whole
difficult.
video about the faucet and like verifying
Yeah.
yourself. It's on it, guys. If you want to play on the Phantom Network, watch that video. I suffered for us. Okay, I did. But
Yes.
you gotta get a faucet. You gotta go on Discord. I mean, you gotta do all kinds of nonsense. Go check out the video. Do I have to do all that, or is there a very simple way to do it? Like, is there a bridge on Hector DAO that I could use, or I mean,
So here's the really cool thing. Now, most of our investors generally come from the smart chain, but we have Ethereum people as well. We've got people from all over the place. So we've written some very comprehensive documentation on exactly how you can move your funds to the Phantom chain if you wish. Now, you mentioned the faucet. We have our own faucet in our Discord, which is
okay,
easier to use and is a really good onboarding tool for investors. So, if you're looking to get involved in the project, I would suggest coming to our community on Telegram or Discord and reaching out to the community and saying, hey guys, I'm on this network and I want to come to Phantom. How do I do it? And I guarantee to you, at least 5 people will reach out either in DMs and public chat. Our community
Awesome.
is wonderful at onboarding people, so that's the best way to learn about it. But in addition to that, we have really good documentation on our website as well.
Look, honestly, documentation, just being honest, I'm lizard brain, right? I don't like,
Yeah,
I want to read this stuff, honestly, is what it, I don't know. Other people are better at this and stuff. But if there is an easier way than the way that I outlined in my video, I'm definitely going to be checking out the community. Guys, be sure to check out, the links are in the description. Check them all out. Do your own research, right? Don't take my word for it. Just because I like something or don't like something means nothing to you. This is your money, your livelihood, your family's at play here. So you make the best decisions for you. Now, I've got one last question here, Prometheus. It's been wonderful having you on here. You really did break my brain here. This has been quite interesting. I mean, really, these numbers are that you're touting are incredible. Like, what do you have to say? Well, first, let me before I get to my last question, what do you have to say to that? Like, what, these numbers are incredible. It's just incredible.
Crypto's a wonderful place. It's I like to put it this way. Never before and never again.
Yes.
I think crypto is the single best opportunity anybody alive right now is ever going to have to change their life in a financial way, in the way that we can. Now, look, I could sit here and say my project is the best. Give me $1 million in stable coins into the Hector protocol. But the thing I would say is research. Always research. Whether it's our project that you're investing in or whatever project on any other chain, always research. I mean, the best thing you can do is learn obsessively, because knowledge truly is power in this game.
Yeah.
Now, to speak to the APYs, crypto's a crazy place, and there's a vast expansion happening, and the innovation is just phenomenal, and these things become possible when you have a community that is as fantastic as ours, and developers and a strategy team that is as great as ours as well. So, come and join us. We would absolutely love to have you.
Yeah, absolutely. Guys, if you haven't already, just check it out. Wait till the end of this video. Thanks for watching so much. Prometheus, one last question, man. In a sea full of cryptos, I think we've already answered this question throughout the video, but just give it to me in like one pithy statement. Why should we be investing in Hector DAO?
Let's boil it down to the key components. So, growth, innovation, potential, and a fantastic community. I think those are the things that really stand out for Hector. Now, I would say learn about the protocol, and if you can sit and read the documentation, please do. There's a lot of, I think there's 27 pages now. I know that because I wrote it. So, I was having documentation dreams at points. But, we have many people on YouTube who have made guides and overviews of the project. So, if my advice for the next step would be learn about the protocol, learn about Fantom. It's a fantastic place.
Awesome. One more question really quick. Why is it called Hector?
Because Hector won the Battle of Troy and was well respected as one of the greatest tacticians of all time.
Ah, nice.
Yeah. So we thought, we could call it Zeus Superman Explosion Coin. And, that has certain conveyance of power, but it's a little bit too...
Yeah, it's a little too
on
much.
The chin, as we say in the UK. So we wanted something a name that had power, when people could research it and think, wow, that's an interesting name, and they research it and they see this and they have the joy of discovering it themselves. If you've not researched Hector as a character, some amazing stories there.
Fantastic. Guys, thanks so much for watching this far. Prometheus, thanks so much for bringing Hector to our table. And Cowboys, we're riding together on this one. At least I am, right? Lizard Brain, Gorilla Arms, Diamond Hands, we're going to the moon together. Cowboys ride together. Be sure to get in a good community, guys. I think that's the most powerful thing any project, any YouTuber, anything in crypto has to offer, is if you put good people, solid people around you, it's a good community that will help you, keep you safe and keep you alert to these types of gems. Anyway, guys, thanks so much for watching, and we'll see you in the next one.